Right. Right. Thank you everyone for joining our webinar, Furlough, Finance and Opportunity. I'm Mitch Hahn. I'm CEO of Norden's Chartered Accountants. And Norden's Chartered Accountants, we're a firm of dynamic chartered accountants, quite a good size, and we specialize in helping business owners achieve their goals and at this moment in time, helping businesses survive and also thrive. So today what we're going to focus on is exactly what it's in the title of the webinar, Furlough, Finance and Opportunity. So 2 weeks ago, we had Director of Metro Bank on, but this week we've brought in someone slightly different. We've got Odhran. Hello, Odhran. Odhran is a Director of Nucleus who have actually they lend directly to businesses. And Odhran has been in the finance business for over 20 years. And it's worth saying that Nucleus have lent over 1.3 billion in total already, and they're very keen to work with all size businesses. So thanks for coming on. I've also got Mark Norden. For those of you who don't know, kind of give a name giveaway, but Mark is the founder of Nordens and has got a very impressive and proven track record building companies and helping business owners through tough times. And obviously we've got Joe Sword. Joe is Director of Nordens and also head of our consultancy division, which specialise in helping business owners achieve their goals, providing a lot more consultancy work and a lot more dynamic work, working a lot closer with businesses. Some of you are clients of us, some of you aren't, but the feedback from our webinars have been absolutely amazing. And we've been overwhelmed with the thank yous and stories of keeping businesses not just alive, but some really interesting, believe it or not, success stories, which is absolutely brilliant. It's exactly what we're about. And I think it's, the message we're trying to get across is to not bury your head in the sand. But the worst thing you can do is do nothing. And although we need to be positive, we need to be realistic that it's going to affect us all in some way or another, but we're going to get through this together, providing the necessary things in place, which is what our webinars are all about. So I know you're all telling me to stop going on. So how's this webinar going to go? I'm going to give you the agenda. So Joe's going to be discussing all you need to know about the hot topic of furlough with all the details and updates from Hmrc. Joe's going to then discuss all other financial all other financial options businesses have, such as the coronavirus interruption loan scheme. He's going to touch on sole trader grants, Hmrc's time to pay options, and any options that you may have. We're then going to hear from Odhran, who's going to give us his thoughts on lending to businesses and any tips he may have. Odhran, I've definitely got some questions for you, which I'm looking forward to asking. We're then going to step into the opportunity side of things. We're going to hear from Mark Norden, who's our chairman and founder, about the opportunities that there are in the world right now and what Mark thinks business owners should be doing to adjust, or a nice word is pivot right now. We're then going to finish with Joe, who's going to he's going to go through how to implement what you should be doing right now. He's going to discuss things like cash flow forecasts, going to touch on sales and marketing and more. And if I'm right, Joe, anyone watching should leave this webinar with some action points to take away. I just need a nod to say I'm right.
Exactly, yeah.
Thank you. We'll then go to a Q&A at the end for anyone who's got any questions. Before we start, Joe, I want to say that any questions that anyone has, stick in the Q&A box at the bottom, or if you feel more comfortable, just email me, mitch@nordens.co.uk, and we'll try and get as many answered as possible. If not, we will answer them away from this call. So let's get started. Joe, tell us about furlough, because it's in the name. What's furlough?
Thanks, Mitch. So hi, everyone. As Mitch mentioned, my name's Joe Sword. I head up our strategic consulting department here at Nordens, and I'm going to start talking today about furlough. So furlough is the buzzword of the last few weeks, isn't it? But what exactly is furlough? So furlough or furloughing workers is the word used to describe the government initiative, which is designed to help businesses keep their workforce in employment. Otherwise, due to the outbreak, they would be forced to lay them off. So the government, in principle, have committed to paying employers 80% of these wages up to a maximum of £2,500 a month. So many questions inevitably have come off the back of this and have been asked. So the aim is to go through a few of the more frequently asked ones right now to hopefully help you. So the first question that we're commonly getting asked is, what do I actually need to do to furlough an employee? So firstly, the employer and employee must both agree for an employee to be put on furlough. Once this has been agreed, the employer should produce a written furlough agreement setting out the date and terms of the furlough arrangement, and the employee must confirm that agreement in writing, which you need to keep on file for 5 years. If you don't have a template or are struggling with a kind of a template letter for this, don't panic. We have one in our pack that you will have access to at the end of this call. And generally, the earliest date that furlough can apply, there's been a lot of conversations around the date. It's the 20th of March, as pretty much all businesses will have been working up until the date of the furlough announcement. So in general terms, the 20th of March is the date that people can realistically start being furloughed from. So that moves on to, what do I actually need to provide? So Hmrc have released a clear list of things that you'll need to provide the person running the payroll for you. And details of these items can be found in our help pack. Now, some of the businesses that we've worked with have been a bit reluctant to provide their bank details, but of course it is you do this to enable the money to come back into your bank account. So the next question we constantly get asked is, can an employee work while they're on furlough? And the simple answer to that is no, they can't. An employee cannot carry out work for the employer whilst furloughed. That is a kind of a golden rule. And providing the terms of employment allow, however, an employee can undertake other employments whilst they're on furlough from their main employment, and that will not affect their furlough claim. So an employee can be placed on furlough by one employer and then continue to work for another. And we've seen people doing this where they've been furloughed from their main job, they've been helping out with the NHS push, and they've been working in a local supermarket whilst on furlough. So there's no issue with that. So basically, in simple terms, an employee can be placed on furlough by both employers as well if they have more than one job, and they can apply the furlough application for both of those. So they can get 80% or up to 2,500 the monthly cap under both their employments if they're furloughed under both of them. And the next question is probably the one I've probably been asked the most myself. So can a director be placed on furlough leave? Can I work, and what do I need to do? So in simple terms, yes, a director can be placed on furlough, but the director cannot carry out any work that provides a service that will directly relate to income. They can carry out, however, their statutory business obligations, such as keeping their books and records of the company up to date. So realistically, with this type of question, a common sense approach is advised. So for those directors that are working in a business while it continues to trade and generate income, our advice is not to take the risk in furloughing yourself. However, those directors where the business has completely stopped, not doing anything, you should consider this. The company does have to file a board resolution to enable them to furlough the directors. But again, in terms of dates, it's going to be similar to the employees, the 20th of March onwards. So in terms of the dates, can employees be backdated any further back? No, it's likely that employees would have been working in that period, like I mentioned. So in terms of backdating, it's going to be very, very difficult. The only realistic way you'll be able to backdate the furlough would be as if an employee was made redundant as a result of the coronavirus just before the announcement. And if you need specialist advice around that, I suggest you contact us separately, and our HR team can talk you through what you need to do and consider. So what are regular salaried employees? So people that are on a regular salary are calculated based on a previous earnings average. So for employees who have been employed for a full 12 months, the amount that you need to calculate would be the higher of the same month's earnings for the previous year or the average monthly earnings for the 2019-20 tax year. For employees who have been employed under a year, the employer bases the 80% on the average of their monthly earnings since they've started. That leads us on to, can I furlough all of my staff or just some of them? The answer to that is either. You can furlough all staff, some of them, or a choice. But in deciding, you should be careful that you're not discriminating against anyone. What's included within furlough pay? Regular payments that an employer is obliged to pay, such as basic salary and compulsory commission. Things like discretionary commission, bonuses, or company benefits are not included, however. Now, one of the questions that we've been asked by quite a lot of people is, can we delay paying the employees and wait for our furlough money to come in and use that to pay them? No, unfortunately you can't, because you need to pay the employees their salary by the due date, as otherwise that would be breaching their terms of employment. So if you're struggling to find the funds to pay salaries and you've examined all other avenues, you should speak to the employees, and if it comes to it, gain their agreement to delay paying their salaries, because you need to have their agreement beforehand. Can employers require employees to use their holiday leave during furlough? It seems like a sensible kind of option and compromise here, but originally we were under the impression that's not allowed, but employers actually can require their furloughed employees to use up their holiday leave. Bear in mind though, that if you have employees taking holiday during this period, you have to pay them full pay. So you would not be able to put them on holiday pay and only pay them 80%. And also bearing in mind, if in terms of the employment with your employees state that bank holiday dates are paid as part of your employment, they should be paid at 100% with the remaining 80 claimed through furlough. So it's not an opportunity to drop their wages down to 80 for those bank holiday days. And workers also have a new legal right to be able to carry over unused leave into the next 2 years, where they're unable to take their holiday allowance because they are actually working. Another question we get asked is, can employees go on and off furlough? The answer to that is yes, although employees must be furloughed for a minimum period of 3 weeks before they can be moved back off again. And once all the nuts and bolts of furlough have been ironed out in your specific case, the most important question is, when and how will I receive the money from Hmrc? So Hmrc's portal went live on Monday. The first claims have been made. One claim for every 3 week period can be made. And the payroll has to be run before the furlough claim can actually be made. Now, although a claim can be made once in a 3 week period, the claims for March and April can actually be made together, because the claims for March are generally not going to cover a whole month. So what we're doing is we're consulting with our clients on whether they should wait until the April payroll has been run and submit both of them, because potentially you could end up being locked out of a further claim for 3 weeks. And as we know right now, cash is king so much. So it's really important that we're looking at that. So once Hmrc have carried out what they call an initial audit, it's expected that payments will be received into the company's bank account within 6 working days. However, for your planning purposes, we'd recommend to allow for 10 days just to be safe. And some of you are probably asking at this point, so what's this audit all about? What's it going to comprise of? So there's quite minimal guidance, as is quite common with Hmrc when they're rolling out these things, what this will actually comprise of. But our payroll and HR team kind of believe that it's going to be just some sort of preliminary initial checks just to make sure company bank accounts are verified and company information is done correctly and entered in correctly on the portal. So we're not expecting any great detailed audit at this stage. And our payroll and HR team are working flat out with this, and we've allocated additional resources internally to enable us to process as many of those furlough applications as quickly as possible. So any clients listening, you will not be forgotten about. And as mentioned, we're not charging our clients for this. So anyone who isn't a client and is listening in today and would like any assistance around their own furlough scenario, just get in touch with us after the call, because getting these claims right and getting them done promptly is really, really important for businesses. So a couple of quick tips. Based on what we've just been talking about, businesses should be looking to ensure they're providing their payroll teams all the necessary information as promptly as possible, because delays are likely to result in your application potentially falling further down the queue. A lot of our clients have already done this already, so thank you very much. It's been really helpful. And as we're probably well aware, payroll teams across the country are inundated, and although Hmrc are pretty slow at dealing with things usually, they've allocated a significant level of resource themselves to this. So everyone is pulling together to enable this to carry on working the way it needs to be. And just to finish off on this section on furlough, I'd just like to say how proud we are as a business of our payroll and HR teams, because they have literally been working tirelessly around the clock to ensure we're positioned as strongly as possible to help all the businesses we work with. So a real big thank you to them. So that covers all the kind of the key common questions that we've been asked recently around furlough.
And sorry, Joe, if anyone's got any more questions, like I said, drop me an email, mitch@nordens.co.uk, or fire them in the Q&A box. I know there's been some questions already, which we'll try and answer at the end. But thanks, Joe, about furlough. Go on. Do you want to carry on about talking about the finance options?
Yeah, so that covers the section on furlough. What I'd like to just go through now is the other areas of government support, which anyone who's listened to the previous webinars, in much detail today, but as I've mentioned, we have created that help pack, which will have more details around these areas on as well. So I'll start with the taxation landscape from Hmrc's point of view. So Hmrc have made it clear they're willing to work with and support businesses in this time, initially with more flexibility over their time to pay arrangements. They then went a step further, automatically deferring all VAT liabilities due between the date furlough was announced, March the 20th, and the end of June, which will now be deferred until March 2021, unless you choose to pay them earlier. It's worth mentioning on the subject of VAT, for those clients that pay their VAT or are set up to pay their VAT by direct debit, you need to cancel that yourself, otherwise Hmrc will continue to take the regular payments. Hmrc have also announced a deferral of self-assessment payments on account that would have been due at the end of July. They're now deferred till January 2021, which is another way that business owners can keep a little bit more cash in their pocket. And I've spoken to Hmrc myself recently around corporation tax, who have kind of not majorly brought this to the table and announced it formally, but they've basically said any businesses with corporation tax liabilities that are due in either March, April or May will also be subject to a similar 3-month deferral, although you will really need to kind of get in contact with them and rubber stamp that because it's not been broadcast, so to speak. But in terms of tax, our immediate advice would be don't make any taxation payments until you've spoken to your advisor here at Norden and they've assessed your situation, because once that precious cash is gone, it's gone and it will be difficult to get it back. So we'll look at gauging timing of payments with you to make sure that you're set up as correctly and as leanly as you possibly can be. The government grants that have been announced around business rates, I'll quickly touch on those. So a £10,000 grant has been proposed for those businesses in receipt of small business rate relief or rural rate relief. On top of this, there's also grant funding of up to £25,000 for businesses in the retail, hospitality and leisure sector, where their property has a rateable value of £15,000 to £51,000. And finally, there's also business rate holidays have been announced and agreed for both the 2020 and 2021 tax years for businesses in those above sectors plus nurseries. And the great news is we're actually starting to see some of these grants coming in now, which is great. But unfortunately, they depend on the local councils being assertive with this. So some of the local councils have been really good. They've been putting the grants through nice and quickly, so people have received them. But some of them we're still waiting. So if you feel like you're eligible and you haven't received anything yet, we recommend that you get in touch with your local council as soon as possible to gauge that time frame. So in terms of self-employed people, so self-employed people will be able to apply for a grant worth 80% of their average monthly profits up to a maximum of £2,500 for a period of 3 months. So the profits will be based on your last 3 years or less if you've been trading for less than 3 years, but you will have needed to be a self-employed person and met the other criteria at the end of the 2019 tax year to qualify. So anything past the 2019 tax year, so if you've just set up in this current year and it's your first year, unfortunately, you will not be eligible for this. So the key headline rules are at least 50% of income needs to come from self-employment, and your self-employed profits will need to average under £50,000 a year. Unlike the employee furlough scheme, however, the self-employed can continue to work as they receive support. And the money will arrive directly into those people's bank accounts from Hmrc, but it won't arrive until June. So it's important, if you're self-employed, you're putting contingency plans in place to last you up until June if you're completely unable to work. So Hmrc are in the process now of inviting eligible people to apply online. And I think, from my understanding, it's a relatively simple form that you just have to register for, and then they'll have your details ready to process the grant. The grants will be taxable and they'll need to be declared on your following year's tax return. And one question I've been asked quite a lot is, I'm a limited company owner on a low salary and high dividend. Am I eligible for this self-employed incentive? No, you're not, because for self-employed purposes, you're not classed as self-employed as you're a business owner where you're a salaried business owner that takes a high dividend, so you wouldn't be eligible. But for those self-employed people out there that are listening, we encourage you to use our grant calculator, because you enter in a few details and you'll give you a gauge on how much you're able to receive. And finally, the last bit of advice for self-employed people is explore your options under universal credit in the short term, because the government have mentioned that advanced claims upon application can be given within a few days. the next thing that I'd like to just quickly touch on is property. There hasn't been a major announcement on this for quite a while, but I've seen recently that Burger King and amongst a few other high street chains have been quite actively petitioning the government for a 9-month rent holiday, although as of yet nothing has been agreed or announced, but maybe something might be announced in the near future there. But in terms of property in general, based on what has been announced, emergency legislation is in place to suspend all new evictions. So for the next 3 months, I believe it is, no one can be evicted from their premises. And to balance this, to support landlords, Hmrc have explained that the buy-to-let mortgages have also got payment holidays. Most of the lenders are entertaining these payment holidays for buy-to-let mortgages. So they're trying to do their best to balance up the situation there. So the next thing and the final thing on this section for me to talk about is the Coronavirus Business Interruption Loan Scheme, or CBILS as an abbreviation. So it's really good to have Odhran on the call today because he'll discuss lots of different options for businesses that are interested in alternate forms. But I'll give you a bit of a background and headlines around the CBILS because there have been quite a few misconceptions around this. So in terms of the CBILS loan, the first thing to know and understand is it's not a government loan. This is a scheme where banks and lenders can get security from the government where the client does not have enough security themselves. When announced, it sounded great. Our corporate finance team have been working with a number of different lenders, and growing frustration and low numbers of success have resulted in the government allegedly making it more accessible. And time is really going to tell just how accessible this is going to be. So in principle, to start with, you'd apply through your bank, who will assess the affordability of your application. And if your bank concludes that you would have not been an affordable borrower prior to coronavirus, and therefore they wouldn't have lent to you prior to coronavirus based on your figures, they're not going to lend money to you now. So this is not a golden ticket for businesses that were already struggling. It's not to sort of give people additional cash to revamp a failing business, so to speak. It's to help businesses that have been really put out. There was nothing wrong with the business or the business model, and they just need a prop up in this difficult time, so to speak. So should you be accepted under the scheme, you're likely to receive favourable terms compared to the pre-coronavirus lending. The government have announced they'll make payments to the bank to cover their fees and the first year's interest. So that will effectively make the loan interest free for 12 months. Now, it's important that we consider that although this interest-free period sounds great, and in general it will be, but we are seeing the CBILS loans that we're working with clients on going through an interest rate after that period of around 3 to 5% per month, which kind of renders the interest sort of a bit back-ended, and it's not necessarily the cheapest. So it's good in principle, and there are options after a year to maybe look at doing something with that funding, but don't get too carried away and make sure you're looking at it as part of your longer-term strategy as well. And one other point worth mentioning right now is if the main purpose of the CBILS loan is to effectively refinance old debt, it's likely to be rejected. So it's really important you work with your advisors to position this when making the application. So in terms of what you need to provide to start an application, and these are stuff that you need to get ready and handy because it's only going to slow things down if you don't have access to it. So there are 10 essential pieces of information that the lenders will need. And our corporate finance team have reiterated that without this, it's unlikely you'll be able to begin an application. So I'll go through them now. If you don't get them all down, don't panic. It's in our pack and you'll be able to have access to it. So the first thing is the last 12 months business bank statements. These need to be scanned, hard copied, scanned on as PDF, because bookkeeping extracts will not be accepted. And some lenders have actually come out and said they need the statement and transactions up to as recent as a 5-day lag. So it's so vital that you have the latest information from online banking, and you just can't afford to wait for bank statements to be posted to you. Number 2 will be your last 3 years filed accounts, which should be pretty straightforward to get. You will also need to prepare a set of up-to-date management accounts. And really, lenders are saying that they want management accounts up to a period of 2 months away. So a 2-month lag, give or take, is acceptable. But any further than that, you might need to refresh your numbers. Number 4 is age debtors and creditors lists. And if you have an up-to-date bookkeeping package, that shouldn't be a problem. You'll also need to confirm levels of outstanding debt that you currently have, such as the provider, the term, and the repayment amounts. You also need to provide a statement of personal assets, liabilities, income and expenditure for all directors. And again, there's a template for this included in the pack if you need it. You'll also need to provide the home addresses of all directors, shareholders, and their date of birth and contact details, which again shouldn't be too much of a problem. You'll have to put together a paragraph on how coronavirus has affected the business and what the funds will specifically be used for. You'll need to prepare a 12-month cash flow forecast, and I'll discuss this in a little bit more detail at the last stage, and the amount required and how this has been arrived at, including the assumptions, which, if you've done a 12-month cash flow forecast, should answer its own questions, so to speak. So they're the 10 key bits of information you're going to need to have at a very minimum. There's also additional information in relation to the coronavirus scheme that lenders will want to discuss with you. And each lender has slightly different requirement, and the most comprehensive list we currently have is included within our pack. So the main purpose of this information from a lender's point of view is to paint the picture of the need and the use of the funds while clarifying the future outlook for the business. But obviously, we're well aware, and the banks are also aware, there's so much uncertainty. So really, when you're talking about these other questions, when they were asked, you just need to be as honest as possible. You're not going to be able to predict the future completely, but with all the things you're doing in the background, such as the cash flow, etc., you should be well positioned to give a good stab at that answer, so to speak. And the good news is, with a comprehensive cash flow forecast and a fully working bookkeeping system, you'll be able to get this information pretty quickly. So the last thing I just wanted to mention was, our corporate finance team have been working with some of the larger banks in regards to these specific loans. And I'll just give you a few of the headline points around them. So the minimum loan is set at 25k. So anything underneath that, they will not entertain, up to a maximum of 5 million. The term will range from 1 to 6 years. It will be completely free for the first 12 months, as we've mentioned. There's also the opportunity of a capital repayment holiday of up to 6 months. There are no early repayment fees as of now, as we're aware. And the government have removed the restrictions around security up for loans under £250,000. So for anything over this amount, there is likely to be security required, but it will be based on the lender's discretion. And this is probably something that Odhran will come on to. And feedback from the banks is that the loan amount itself will be the lower of 25% of your 2019 turnover or double your 2019 wage bill. So in a nutshell, it's just to get across, there are options out there in terms of funding, but you need to be agile, you need to be prepared, you need to be getting your information sorted, because things will take time, and time is something that in some respects we have a lot of, but in other respects we don't. So it's just important you do things in a clever way to make sure you're best positioned. So to finish off and summarise in 3 key steps, what I think you should do next in respect of this. Firstly, explore all the options that we've outlined. Look through our pack, make sure you've covered everything. There's even a checklist in there for you to use. Number 2, based on your cash flow forecast, assess your true need for funding using your pinch points and your buffer that you need. And lastly, ensure that your books and records and related documents are up to date, because you don't want to be slowing down the funding process because of this. It would just be so unnecessary. And as Mitch mentioned, if anyone would like to have a private chat with us after, just say it and we can schedule something in. But for now, that's it from me on this subject. So thanks for listening so far, and back over to you, Mitch.
Thanks, Joe. It's really interesting. I think it's worth saying as well that the banks are under pressure to start changing things as well. So what we're saying now may change over the next couple of weeks or so, which is important to say, because I do know that there's a lot of talk with them, you know, with regards to personal guarantees and things like that. But thanks, Joe. We'll hear from you in a bit. Odhran, welcome. Thanks for waiting. Odhran, to start, why don't you tell us a bit about your company, and I guess, are you doing the government-backed loans?
Okay. So first of all, thank you, Mitch and Joe and Mark, for having me along today, and hello to everybody. My name is Odhran Dodd, and I'm a director at Nucleus Commercial Finance. And to answer that in short, Mitch, no, we're not. And the reason why we're not is that we pride ourselves on being very much an independent business. And as a result, we can look at all these cases that we are presented to us and all these transactions very much on their own merits. And because we're an asset-based lender, so we secure our funding against the assets of a business rather than the profitability. So the profitability of a business is less of a concern. We're very comfortable lending to loss-making businesses. We're very comfortable lending to companies that might be out of favour, to sectors that might be out of favour, to areas that might be out of favour. We're very comfortable lending to companies that might have a story about them. And let's face it, every company now is going to have a bit of a story about it. And we're very comfortable lending to companies that might have a bit of hair on them, so to speak, that they might need, a little bit of TLC as a result of this. Because let's face it, owner managers, prior to this have had an awful lot on their plate between, the B word and, everything else before that. So there might have been certain things that might have been missed in order to keep the business afloat, even prior to this. And one thing that, we're seeing quite substantially, and I was in advisory for 20 years, before I joined Nucleus, is that the banks not lending to the SME space is not a new thing. This is not, a new phenomenon that has come about as a result of C-19. Recent surveys and our own research, suggest that, some recent surveys shows that banks have less than 2% of their balance sheet is lent to the SME space, lent to the SME sector. That employs nearly 6 million people in the country. That is absolutely the driving force, the engine of the country, the powerhouse of the country, and the banks are effectively ignoring it because the banks are taking very much a trickle-down approach. They're lending to the large ones and hoping that they will pay, and that will trickle down. But that's not happening because the cash balances of these large companies are substantially higher than they ever were. So they're hoarding that cash, for that.
So Odhran, sorry. Talking about your company, what's the appetite for lending?
Substantial, absolutely. Our appetite,
given the current climate,
our appetite hasn't changed one iota since this crisis. Not one iota. We have always had this appetite. We have lent since we started in 2011, and if the banks were lending, then there wouldn't be a need for us. But the banks aren't lending, and they weren't. So we were born out of a time when the banks aren't lending. We were born out of a time when things were stagnant, but our appetite hasn't changed, and we have lent in excess of 1.3 billion, nearly 1.4 billion.
So that's obviously a large number. That's obviously a large number, and I don't think anyone watching is going to ask for a loan anywhere near that sort of size. But what size of
Mark would?
What size of loans do you cover?
And so we have a number of products across our suite, and we can do unsecured loans up to 200,000 to UK companies that have been around for 3 years or more that are profitable. And we can also do asset-backed loans up to 60 million, from 500,000 really to 60 million. So we've got, quite a breadth of, of capital that we're able to put to various different, uses. And we're very well funded. We're very well capitalized. We've got, and we are lenders. We're not brokers or intermediaries. It's our money on our balance sheet. So we're go on.
Sorry. So your loans, the loans that you're getting, I mean, it's great that you're lending. I think it's really good. I think people need to look at other various options because, I think we had a client recently I can't remember the bank actually, which I don't want to name them because just in case it's not that bank, but they were really, it wasn't, I'll say as disgusting the way they dealt with the client, almost putting the phone down on them, not trying to help at all. So I think every business should look at other alternatives as well as their bank. I think it's great that you're lending, but are your loans to cover the current problems to help or to help businesses grow? Can you provide something like the interruption loan scheme?
Well, the unsecured lens that we can provide, would certainly, up to 200,000, I think would probably fit that quite nicely. However, if there are underutilized or unutilized assets within the business, so say for example, there's an unutilized debtor book, we can finance that. If say for example you have been promised money under the C-bills and are waiting for that, we can fund that because that's effectively a receivable. If say for example there's stock in your business that is valuable, and isn't doing anything at the moment but will, then we can secure financing against that. If you have property, say for example, either personal or within the business, that is unleveraged, we can leverage against that. If you're plant and machinery, we can leverage against that. So we're not just focusing on this because let's face it, this will pass. I've absolutely no doubt that this will pass and we will come out of this. And we need to come out of this having used this time to properly optimize and maximize what is already a very good company. So use this time to.
Sorry. I was going to say, how does the interest rate differ from loans that would be available in pre this new world?
Well, again, our loan pricing hasn't changed, so we can lend at 5%, and we can lend to riskier, transactions and riskier companies at 15, and we can go from, all of that. But we're not going to be able to lend at 1.5. But then again, those who say that they're lending at 1.5 aren't really lending. So again, our pricing is very comfortable. The very good thing about asset pricing, though, and especially about the revolving loans that we can provide around stock and debtors, is that the facility flexes up and down. So if, say, for example, this month you need 700,000, and next month you need 1.5, then you're only paying interest on the facility side. So you can up it and down it, you can accordion it as you wish, as opposed to, say, for example, if you take a loan from a bank or something like that, you're paying interest on the full amount, and if you don't, you're not, you're paying non-utilization fees and things like that. So we don't do that. We consider that to be an impediment, and therefore you're only paying for the money that you use.
So, okay, no, good. And turnaround time to make some sort of decision. Obviously, people need cash right now.
Yeah.
Businesses need cash. What's your turnaround time?
I'll give you an example, Mitch. We received a phone call from a private equity house to buy a recruiting business, and they were looking for 60 million. We provided a credit committee cleared term sheet in 36 hours from that phone call.
Okay, good. So
we can turn it around very quickly.
That's good. Really good. Good to know.
We are not. We will move at the speed of a client.
That's really good. I think everybody who's watching would find that quite refreshing.
Yeah.
So
we're very technology focused, so we're able to, not being in the office for us doesn't bother us. If a transaction comes in and it needs, on a normal Wednesday afternoon, I'd be sat beside my boss, Ian Bath, our head of risk, David Barty, would be sat behind me, and Chirag Shah, our CEO, would be sat 20 feet away. That's the credit committee. That's the decision.
And whether the loan's 50,000 or 60 million, you'll still treat everything the same.
Of course.
With the same time frame. Good. Really good to know.
Now, we have different teams for different products, but yes, absolutely.
Okay. And if a company, it's a question that I've got personally for you. If a company was fundamentally sound before the current economic crisis, but is suffering at the moment with cash, are they a business? I think you may have already answered this, but I'll ask you again. Are they of interest to you?
Of course. Absolutely.
Okay, fine.
Yeah. But because when you say is suffering, you probably mean loss making.
No, I mean suffering through the moment, cash flow really bad.
Yeah, of course. But what we have and what our strap line that I say to a lot of people is that utilize our money to make more of yours. So we have our what we do is that we rent out our money at an interest rate, and we're able to to provide that to our clients and to companies. So for us, whether a company is suffering, our job is to try and help. Now, don't get me wrong, we're not going to lend money willy-nilly. We're not going to lend money to people that we don't think are companies that we don't think can service it. But if there's an asset, if there's a basket of assets that we can secure against, we might say, for example, require some, boot capital, for example, like maybe if there's, property, maybe a property portfolio owned by a director, just to show alignment, to show that, we're all taking risk, then, that would be even better. But, our doors are well and truly wedged firmly open.
Okay. And are there any sectors that you're not interested in?
We probably wouldn't do care homes only because, and we probably wouldn't do pubs only because the license trade is difficult to lend against, and so with the care homes. But other than that, we're very comfortable, with, probably hotels would be difficult. But other than that, like with property, say, for example, we can lend up to 20 million at a 70% LTV. We're very comfortable with that. We've got a construction finance team as well. And we're very comfortable lending, to that sector, which, we see as, an awful lot of banks have discounted the construction sector and construction related, even in the good times. And 19% of companies in the UK, that's nearly 1 in 5 companies in the UK are related to the construction sector. And we feel that it is, it's terrible that that's a sector that has been neglected. So I doubt that those sectors that had fallen out of favor by the banks are now all of a sudden going to become, quite good, they're going to become good risks. So we're comfortable lending to, these sectors. And we consider these companies because we would lend on those applications. We're very comfortable lending on contracts. We're very comfortable lending on, application for payments and things like that.
No, it's good. It's really good to know, and I think you've answered all my questions. I'm a bit conscious of time because I want to get onto the opportunity side. But Odhran, thank you for coming on. I think it's really really valuable to hear your side of the.
It's a pleasure. Thank you for asking
your opinion. And I think if you can hang around, if anyone's got any questions, they can put them in the Q&A box, and then we can answer them at the end. So Odhran, thank you. I want to move on to the opportunity side of this webinar, which is, furlough finance opportunity. We've covered furlough, we've covered finance. This is the opportunity. And Mark, thanks for coming on. I think for me personally, and you, Mark, as well, we've always spoke with business owners, and the most of the time, everybody's pretty much said the same thing. Oh, I wish we had the pause button. I wish we could hit the pause button so we could focus on things, work on our business rather than in it. And I think, I'll let you go into, I know you've got a lot of things to say. But for me, I think this is the perfect opportunity to start working on your business rather than focusing on working in it. The time's there. But Mark, thanks for coming on. Do you want to take it from here?
Thank you. First of all, I just want to say, Odhran, I sent you the email while you were talking. I've applied for the 60 million, no guarantees, no security. And I've had a few friends WhatsApping me as well to say they'd also like some. First of all, I just want to apologise because I know it's a terrible time that we're going through at the moment. And I know that we've all been affected, and we know people have been affected by the virus. But I think from a business point of view, this is the biggest opportunity that probably any of us have ever seen, and the biggest opportunity in a lifetime. And if we look back at previous recessions, they've all come about for different reasons, but they all happen every 10 years or 7 or 10 years. In the Middle Ages, apparently recessions were blamed on sunspots. In 1929, it was based on the stock market crash. And in 2008, it was blamed on the banks. But the reality is recessions come and recessions go. And every time that we ever go into a recession, we always believe that we're never, ever going to recover to pre-recession levels. And especially if we look at the economic predictions from last week, which was scary. But the reality is the economy does always come back. It comes back quicker, and it always exceeds the previous highs. It's just the time delay. So I think if you look back at previous history, recessions always involve a new technology, which assists companies to thrive through the recession and afterwards. And in my opinion, it's our ability to use technology to run our businesses virtually that is the big technological change this time. Because if we look back even a month ago, all happily working in our office, working face-to-face, doing meetings. Now look, we're all working from home, using our cloud-based systems. Our business is operating the same as it always has done. We're just using video conferencing to do this, to do all of internal and external meetings. And something old-fashioned like a telephone. So we're all pivoting and we're all changing. What I would say is I think with the government, with the intervention that they've made, whether there's any substance to it or not, and whether it works is a different thing. But I believe that, we should escape the Great Depression. But I think the underlying problems are going to be there for a long time. And we're likely to face several years of a slow economic growth just to get back to where we are. But what it means is that there will be opportunities.
So okay, but in your opinion, where are we with the current economic crisis?
Well, I think for businesses, there's been 3 clear stages. The first stage, and I know this one well, we went through it, was putting their head in the sand. Business owners panicking, doing nothing, sulking. The first weekend when I realised, it was before lockdown, the first weekend, I remember coming into the office and was chatting about it. I sulked the whole weekend. But I think to get to the next stage is where we have to accept our position. And I think most people have stopped panicking and are actually accepting their position. And I think what we've done to work with business owners has helped them through that. And I think most people now are on the second stage of their business, which is about survival. And the way that we've helped them assist their businesses is with furloughs, grants, loans. But the most important thing has been about preserving bank balances. I believe that some people already have gone through it. I was chatting with a client this morning who'd made huge changes. He obviously read it really quickly, what was going to happen. But the third stage is us changing our mentality away from surviving and towards thriving. And during a recession, some businesses thrive and others just survive. And, you know, without being rude, I know which group I prefer to be part of.
So, I mean, you've said the 3 stages, which I completely agree with, and I know that you and I have discussed it quite a lot in the background. But I think for people that don't really know what to do, what should, I say, successful business owners be doing, but what should all business owners be trying to do?
Okay, well, let's look backwards. So allegedly, most business owners should spend 30% of their time doing work, 10% leaving the business, and 60%, if my maths is good, marketing their business. But we all know that the truth is with our businesses, we spend 90% of our time doing work, and who knows what else we do with the other 10% of the time. And this time, it's really, really important that we use our time properly to pivot the business and market, which I'll come on to in a minute. But I love this quote. I've been using it all the time in the office. Apologies if I get it around the wrong way, but it's Winston Churchill quote: "A pessimist sees the difficulty in every opportunity, and an optimist sees the opportunity in every difficulty." And I just think it's so true. And I think that the companies who do get through this recession will enjoy a sustained advantage. And my suggestions for them to do it are, number one, and I think this is probably the most important thing: be decisive and act early. The second thing is to take control so that the business survives. And this is about protecting cash flow, all the things that we've been working on, all the things that Joe's talking about now, we've been talking about for weeks, and I'm sure we'll be talking about for months to come. But furloughs, loans, grants, making sure having control of that cash flow. The third area, I'd say, and this is something I think we've done really well within our office: communicate well with your team so that the whole business is taken forward on the path. And I think it's really important in this period. I know it's easy to furlough people and lay people off, but I think it's important to retain the highly effective team members that we've got, because we need them for that next stage of growth. And here's another quote, I hope I get it right as well, one from Mitch here about sport. But in sport, victory can be built on strong defence. However, you can't put together a winning season without an effective attacking strategy. And I think everything we've been talking about so far in the previous conferences that we've done, they're all about defending our position, retaining cash flow. The next points that I want to chat about, I think, are how we change our business. And the next point is pivoting our business. So it seems to be the buzzword at the moment, but we've all seen how restaurants have started delivering because they're not allowed to have people there. I read about a gin manufacturer who's been manufacturing hand sanitizers just to deal with the demand from that. Fitness coaches giving lessons online. I just think it's amazing to see how people have changed their business, worked out what it is that they can deliver to people, and changed their business model to actually doing it. The next area, which is a strange one to say, is with us all cutting back on our costs, which everyone's done to retain cash within the business. It is an opportunity, but only if we do it for positive reasons, to reduce our prices using strategic pricing strategies. And I don't think we should just cut prices for the sake of it, but I think there are good reasons to do it. If we do want to be aggressive and grow our business, there are ways that we can strategically change our price, take market share, but not affect our profit margins. And first, these are just general terms, but we could always reduce the price by reducing the content or packaging. You know, we've all seen it with chocolate bars, how they all seem to be smaller these days, but we still pay a similar price. Or we could unbundle services, so we differentiate and make them into smaller categories and charge less for that smaller amount. Or maybe, this is a bit cheeky, but increase the price and give a bigger discount, so we end back in the same place where the price isn't reduced, but people feel like they're getting a reduction. I think that the next stage of the recession is, generally following recessions are inflationary periods. And if we can cut back on our costs and somehow work out how to be proactively cheaper than our competitors, not for the sake of it, but for a strategic taking market share, by reducing the prices, we could already be in a stage where we can deal with the future inflationary pressures that we're dealing with. And the next area is, everyone's cutting back on costs, but the one cost that everyone loves cutting on, and it's the first thing to go, is advertising and marketing. But what happens with that, of course, is when everyone stops advertising and marketing, they're going to create less leads into their business. Now is a great time to be marketing because our competitors aren't. It's cheaper to do, and if we get it right, we can create opportunities to leapfrog our competitors in the industry. And my last main area to think about is possibly won't apply to lots of people, but just to invest in the future with maybe merging business, acquiring businesses, disposing parts of your business, increasing research and development just to actually move the business forward. So if I can sort of finish this off with what I'm loving about the current environment is if I look back at my past, I'm responsible for bringing new business ideas to Nordens. And normally what I do is I spend 6 or 9 months researching something, learning, creating a whole product or service. And then 6 months, 9 months later, I bring it to the team and then we start working out and we start delivering it to clients. What I'm loving is the speed that we can move at the moment, even though everyone's working from home or doing nothing. I love the fact that we're coming up with ideas, we're testing them, marketing them, and we're dealing with it straight away. So if I give an example of what we've been working on, we've had Joe heads up the strategic department. We've always provided strategic advice to clients to help them grow their businesses or deal with the problems they've got in their business. You know, over the last week or 2 weeks, we've been testing a new service called, I have to do this voice, sorry, Mitch, the Wheel of Success. But I'm sorry. But we've been developing it and testing it. And the last week, we came up with the idea. We tested it last week internally. Monday, we tested it with clients. We'll test it again this week or next week. And hopefully we'll go live in the next week or so. And it's just so fantastic as a business owner. And I love this whole back to where it was, making ideas, coming up with ideas and making them happen straight away. So I totally believe that we can assist business owners not just survive, but thrive and have the business of their dreams rather than the worst nightmares. And to finish off, all I want to say is, and this is personal for me, stay positive, don't watch the news or read newspapers, hug trees, and I hope everyone stays safe through this period. And we're part of your plan, not only to survive, but to thrive. Thanks, Mitch.
Thank you, Mark. I think it was very, very good. And anyone who's got any questions, and breathe,
Sorry.
and breathe. Breathe is a good one. So I think I think that was brilliant. Any questions that anyone's got for Mark, feel free to stick it in the Q&A box. We'll try and cover it at the end if Mark's happy to hang around. But yeah, thank you. I want to move quickly on to Joe following that, whilst your wisdom is still in everybody's minds. So, Joe, being head of our consultancy division, following on from what Mark said, what should business owners start doing?
So anyone who's watched the previous webinars that we've put on, I'm going to go through a few of the similar things. So hopefully you've taken them on board and you're actually putting some of them in place. And if you are, well done, because you really are giving your business the best chance of not only surviving, but being positioned to thrive, as Mark was mentioning. And for those of you who haven't quite got over that period of fear yet, I think we just can't encourage you enough to do so, because you need to be taking action, and being able to feel comfortable to take action starts by being informed. And the number one reason I think you need to be informed is to have that cash flow forecast in front of you that I've mentioned before. So I've mentioned already, cash is king, and I'm going to keep continuing to say it. And we just can't emphasize it enough that every single business should be working with a weekly cash flow at this point. And recent research has come out that 1 in 5 small businesses are going to run out of cash during this period. And you really, really need to have a good grasp on where you are to avoid being part of that 20%. And your cash flow forecast not only has kind of preservation benefits, it has longer term benefits as well. It's your go-to tool to understand where you are and where you're heading, because you can spot and predict those pinch points. So the better quality information you have in front of you, the more better quality decisions you're going to be able to make. So for those of you that are really struggling with their cash flow and have watched maybe a couple of webinars but have not kind of got on and done it and plucked up the courage to just get on and do your cash flow, we've got cash flow templates in the pack, so please use them, make the most of them. And what we can do once you put that cash flow together is we can help work with you on different scenarios and look at different options. And we're working with a few clients on a weekly basis where we're just analysing and going through and just chatting through their cash flow, looking at different options. So they've got a plan A, they've got a plan B, they've got a plan C. And it's just really beneficial because you just see the emotion in them just relax, and because they've got that understanding and that knowledge, they feel a lot more in control of the situation, and that helps influence the rest of the business decisions they're making. So if they know where they are from a cash perspective, they're just in a much better overall mindset. So just to reiterate, it's so important to get your cash flow forecast prepared. And a lot of businesses we're doing are starting the cash flow for the first 3 months. Brilliant, that's great. But what we also need to be thinking about is we don't just need to segregate everything into this next 3 month doom and gloom period. We need to be thinking of fast forwarding and coming out of this period. So cash flow needs to be extended to include the future periods. And I accept it's going to be difficult to predict how we're going to come out of this, but just give your best estimate because you have to start somewhere. As I've mentioned before, it's just so essential you get your books and records up to date. It's a complete no-brainer. In light of funding options and just general control and understanding of where you are in the business, now's never been a better time to just be on top of that. Make sure you're fully automated wherever possible and just get good quality information quickly to allow you to make decisions. As Mark mentioned, it's vital to be communicating with your team. And we've done this well, in my opinion, because we've done it regularly. And short and often is often better than a long drawn out wait and then a load of content. So short and often, nice and simple, succinct to the point. Come across upbeat as much as you possibly can because it will give off good positive energy to the rest of your team. And just make sure you're acting correctly from a legal and HR point of view. There's nothing worse than thinking out all the plans and then you do something silly where you haven't considered something. So Sharon, our head of HR, has been really working hard with clients just to make sure that the advice they're giving employees and the way they're dealing with their employees from a HR perspective is the best way to do it. Another thing that's worth mentioning, we're all on a Zoom call today, make the most of these type of apps. I mean, it's been fantastic for us. We've been able to have loads of regular conversations with clients without leaving our homes. So we've been able to continue working with our clients really regularly because of the apps such as this, the share the screen, you're able to show them things and talk through things together. It's a really good tool to have in your arsenal when you're dealing with businesses. I understand it won't apply to every business, but every business that deals with customers can hook them up to a Zoom call, you know. So in terms of customers chasing for payments, making sure you've got that clear credit control procedures in place is so important because, as I mentioned, you're building a forecast here for your cash. If you've got a good grasp and a good relationship with your customers about money that's owed into you, you're going to be better positioned to ensure your cash flow is up to date and correct and accurate. And you need to understand if there are going to be significant delays that you could potentially talk about them in terms of interim billing or billing for work that you've already started pre-coronavirus that you haven't yet billed. You know, just making the most of billing everything you possibly can as early as you can, because that's the best way you're going to get money in from your customers, you know. And again, as Mark mentioned, we've talked about pivoting, and the best businesses are looking for opportunities to pivot. Mark's given some examples, and some clients that we work with closely, I wanted one client who's done amazing with his gym, and he could have buried his head in the sand and just let his gym close down until coronavirus and just hope for the best, but he didn't. He was proactive. He really made a change and just said, look, I'm going to hit this head on and I'm actually going to set up online gym sessions. And the feedback he's been having from his clients is phenomenal. It's just everyone's still in a really good place. Everyone's achieving their goals of keeping fit throughout this, and everyone's kept built into that family community that he's built. And I think he as a business will come out even stronger because of this. And so there are some really good success stories out there. And I think what you need to just look at is every business owner at the moment has probably got more time to think about strategies and work on their business. And I think it's so good because it gives everyone that kind of creative space that they've probably been longing for a long time, because a lot of business owners that we've worked with well before coronavirus have just been so bogged down in the day-to-day, and it just gives them the opportunity to say, well, at the moment, the day-to-day doesn't exist. So how can we be creative and look at clever angles to move the business forward, either in this period or make sure we're ready to come out of this period, you know? So we've got we've got clients who are looking to actually work with their customers as part of their own coronavirus planning, you know, so they're actually discussing with them, how are you as a customer coming out of it and how can we assist you there, you know, so they're kind of consulting through mediums like Zoom. So it's really, really beneficial, and that sort of creative thinking is really leading to good results with a lot of clients that are applying that. As Mark mentioned, consider things like R&D. It's a quick win if you're eligible. So have a watch of our video that we've put together. It's really useful. It breaks down a pretty technical subject in a few minutes, and you'll know quite quickly whether it's something to pursue further. But the clients that have, again, have really benefited from it because there's a good cash incentive there from Hmrc. When we talk about communication in terms of your team, it also applies to your suppliers, your landlords, your lenders. Be open and honest with them, because a lot of your suppliers will be going through the similar thing. And feedback from clients we've worked with on their cash and their suppliers have basically said that the suppliers that are really dragging their heels about things and causing problems are the ones that have not been communicated with. The ones that are actually in dialogue with you are quite open to dealing with things because they're in the same boat as well. So I think the underlying message with all types of communication is do something, don't bury your head in the sand, and just keep in touch with people, because when they have that communication, they're going to be more likely to work with you as opposed to just working against you. Consider insurance, consider foreign exchange. And finally, one other thing, we've seen a few scams come about through emails and things like that, especially in light of the furlough. Just be on guard and be aware of that, because people are looking to exploit things like this, and you don't want to be sending money across to anyone that you don't have to, that's for sure. So just be on guard that there are a few scams going around at the moment. And if you feel like you've been received any information from Hmrc and you want to check it's genuine, check with us first before doing anything. So that's sort of things that you can do quite comfortably. And I think just to elaborate a little bit on the planning ahead section, I think it's a case of business owners now have time, like we've said, and once you've kind of transitioned through that fear zone of everything being difficult and I just can't think straight because I'm panicking so much, the businesses that are getting back to being focused and spending time thinking about, okay, we accept the situation for what it is, how can we move forward, are the ones that are really going to be positioned for success. So a few other things to consider is evaluate your business model, look at it, look at your product and service offerings, and ask yourself questions such as, okay, we've got a lot of strengths, our business has got a lot of unique selling points. How are you going to retain those and keep those sustainable, stop them being poached, so to speak? How are you going to stop your competitors getting to your level? How are you going to address and transform your weaknesses into strengths? What weaknesses do you currently have? Be brutally honest. Really rip your business to shreds, so to speak, and then you can build it back up the way you want it to. What opportunities do you have in your business? As we've mentioned, a lot of agile businesses are creating opportunities for themselves, you know, and with a bit of creative thinking, there are opportunities out there for you. What other threats do you have at the moment? What other things are coming at you that are difficult to handle? And what safeguards are you putting in place to prevent these being magnified to an uncapable level? And I think it's a case of the current crisis has brought a lot of challenges around for businesses in various different ways. And it's unlikely this is going to be the only crisis that your business faces in its lifetime. You'd like to think it's one of the bigger ones, but it's important you use learnings from this period to put measures in place to limit yourself for the future. And I think it's about giving that message out to your team as well, positioning the future and saying and making it clear it's not all doom and gloom. You're at the forefront of developing your strategy to come out of this, and the business will move forward from it. Keep your team in the loop with that. Generate ideas. We've had lots of different ideas from our team internally, and we've looked to implement lots of them. And I think it's good because everyone feels a part of something bigger then. Like Mark mentioned, you've got to assess your cost base, because what this has actually done is it's given every business the sort of kick they need to assess that. And every business that survives this will come out leaner because they'll be a lot more aware. We've dealt with clients that are paying for things that they didn't even realise they were paying for just because of the time. Things have just been paid for years and just been left. And I think it's a case of really critiquing every single expenditure in your business. Create your post-coronavirus marketing drive. Who, what, where, why are you targeting? Review and analyse data that you've probably been collating for ages and just not had a chance to do anything with. Take advantage of not being bogged down in the day-to-day and assess your marketing message and your target audience, and ask yourself the question, what impact does my product or service have on my customer's actual life? Because that is the key to why they will be buying it from you. I think one thing I'd really like you to consider is really scaling everything back and looking at your personal goals, because this is a time where everyone's appreciated that health and family comes before everything else. So this time will allow you to look back and say, right, okay, why are we in business? Why did we even create this business to start with? And what are you actually looking to achieve? What is your vision? And what are your roadmaps to get there? You know, so our strategic team, that's basically what we do in a nutshell. We help businesses identify their goals and actually take actions towards them. And I think once you've clarified that, your vision can become a reality by having lots of different things in place, a regular financial system, a team target system, and lots of different milestones to ensure you get the most from your business and you've got that clear sense of focus. But it all starts with that vision and setting out those goals, because we use the analogy a lot in and around the office that if you're in a car and you don't know where you're going, you're not going anywhere, you know, and it's very, very important that you kind of set out clear goals, and they might change, don't get me wrong, but you need to have a direction, because what it will do is as you set those goals and you start achieving them, you'll get that sense of achievement and you'll carry on being motivated, because it can become quite easy to get demotivated when you're in this day-to-day slog, so to speak. So actions around the opportunity. I think you need to ensure you have a fully working cash flow. That's an absolute given. You need to do everything that you can to have conversations with teams, suppliers, customers, plan ahead, put a plan in place. And if you are serious about taking your business to the next level but need some assistance to do it, then send Mitch an email after this and we can tell you a bit more about our Wheel of Success program that, like Mark mentioned, we rolled out earlier this week to a select group of clients. And the feedback was pretty brilliant, to be fair. They all enjoyed it. They all got something from it. And we're going to look to implement more of these and improve them along the way so we can touch as many business owners as possible from a strategic point. So taking everything into account that's been said today and what Mitch has alluded to, what I'd like every single person on this call today is to write down between 1 and 3 clear actions you're going to take ahead of our next webinar. And you need to make the actions measurable so you can track progress. And so I'll give you a tip with the first one. If you haven't done it already, you have to do a cash flow forecast. You have to do something. You have to put your cash flow forecast together by the next webinar. It has to be done. It's so important. Make your actions meaningful, because I'd rather you write down one action that you really, really care about than 3 half-hearted ones just to say I've written down 3. And wherever possible, probably one of the most undervalued things is make someone accountable for it. Whatever goal that you're setting for the next week, text it to someone after this and say, this is what I'm going to do for the next week. Because that way, all of a sudden, you're now accountable for it. And we've realized that the businesses that do this achieve their goals a lot quicker because they feel that accountability to someone else. And I'm happy for you to text me it. I don't have any problem with that, and I'll help you be accountable for that. But start slow. 1 week, 1 action. If it can't be any more than 1, just do 1. 1 week, 1 action, and let's see where we go from that. So as Mark mentioned, the best businesses, they're embracing the challenge. They're looking for areas to pivot and take action, and we urge you to do the same. So stand out from the crowd. Position your business to give it the best chance to thrive. So that's it from me. Hopefully you've all got something from it. And like I said, feel free to text us at Nordens or send us an email with your action, because we're really, really keen to see how you get on with this. One action, guys. That's it from me. Thank you very much for listening. And
thanks, Joe. No, Joe, I think that's very, very helpful. And I think when you touch on the Wheel of Success, it's a way of us pivoting as well. We're taking our plan is to help as many businesses through this period, but not only survive, but to thrive. And if we can take our really high value consultancy and water it down and get it out to as many businesses as possible, then that's what we're going to do. And that's what it is. So look out for it. If you are interested in it, then drop me an email and I'll give you more information about it. And we can discuss that further. Joe, thank you very much to everyone. Look, if anyone who's on this call wants to have updates or could we sending stuff out daily, giving our clients updates, or anyone on our mailing list? So, sign up to our newsletter. Just go to our website, nordens.co.uk. There's a box at the bottom, newsletter. we'll get you out all the information. Or like I said, if you've got any, if you want any further support, drop me an email, mitch@nordens.co.uk. And yeah, no, I appreciate you all for joining. But I want to get onto some Q&As now. So I'm going to unmute everyone because there's questions for pretty much everybody. Mark, for some reason, I can't seem to unmute. Yes, I did, just unmuted you. So let's start. So firstly, I'm going to just check my, my email first. The first question I've got is, Odhran, in your opinion, would loan companies look at people switching loans to try and get better rates than what they are currently paying? And would you consider refinancing, I guess, other loans?
Yeah, of course, absolutely. We're not in a position where we can where we have the ability to say no to that. So yes, we'd be very comfortable refinancing. An awful lot of our current clients were with other capital providers, so we're very comfortable picking up where others, and frankly the responses that we've seen back from the banks has been fairly draconian was one word that was used in getting people to jump through these hoops, whether they are eligible or not for these CBILs. But we're very comfortable, absolutely, yes we are, in refinancing, of course we are.
Thank you. Joe, question about furlough, and we get asked this question on pretty much every webinar. Can I still post to my company's social media account whilst furloughed?
I think it's one of them things, like we said, it's sort of like a common sense approach, because the reality is, post on the social media account, although the aim is to sort of lead it to directly generating revenue, you can't really quantify that it will. So I mean, there's no clear guidance on this, so we can't be 100%, but I would think post on your social media account while furloughed would not be the end of it. It wouldn't cause you any problems. That's sort of our unanimous take when we've discussed it.
Thank you. I'm just going through this through these questions, trying to get the best ones possible. Where do I find a self-employed grant calculator? After this call, everyone should get a follow-up email with all the information and all the calculators, cash flow forecasts, etc. So you'll get all that information after. Question for Odhran. My son has an events management company and has done some events rescheduled now for next year. If he has contracts in place, would you be able to assist basically as a bridging loan to pay some future suppliers earlier in the year?
Well, if there's invoices that have been issued for that, then yes, absolutely. And they've all been agreed, then yeah, that's a receivable.
So
yes.
Maybe not invoices, but contracts. So contracts, what about contracts in place?
Well, in that case, they may be able to access the unsecured product that we have. So absolutely, if they're if the business has been around for 3+ years and can show 3+ years accounts, we're very comfortable in putting an unsecured lent into that, possibly to help with that. Yeah.
Thank you.
Can I ask, Odhran, can I ask a question?
Yeah.
Sorry, I feel a bit left out.
No.
You obviously do debt finance, but do you do equity finance? Do you ever take shares or anything like that in a company?
We don't. And I suppose there was one question I saw there about startups. The reason why we don't is that we're not priced to look at equity. The risk of that would mean that we're pricing at 35% rather than 10. So we're not comfortable with that. So we're not going to be looking for equity warrants in in your business or anything like that. And in lieu of fees, for example, that's just not how we work. One question that I saw there was asking about, because in my previous life I was an advisor, I was a corporate finance advisor, so I used to raise money for companies and advise in buying and selling. And looking for external finance for a startup is difficult. Even in the best of times, it's notoriously difficult. And what every single investor now would like to see, I've absolutely no doubt, because I've talked with with a lot of them in the last while, is they want to see friends and family money going in first. They want to see people taking risk on their own idea themselves, taking their own risk rather than looking for external to carry that.
Well, we work with places like Angel's Den, who deal with investing in starting up companies. So if anyone is interested, we can always introduce them to them.
Of course.
Okay, so more questions from participants, Mark. Thank you very much. A question for Joe. Are we able to top up from the 80% furlough wages to 100% so our payroll will run as normal?
Yeah.
Fine. And will Nordens provide their clients with a director resolution document template to enable directors? Yes, we can provide all that information. So just get in touch, and if we haven't been in touch with you already, which I think we have, get in touch. We can provide all that for you. Question, Joe, again for Joe. How can personal service companies get any support? Because right now, again, we get asked this question a lot in previous webinars. With apart from furlough, the revenue aren't offering support. The government aren't offering support for dividends, low salary, high dividends. So, what's your opinion on that? And do you think anything will change?
Well, I think unfortunately they are probably one of the worst hit, I would say, and I think it's a case of if their personal service company's not trading, they should be looking to furlough themselves as a director first and foremost. They should, like I mentioned on the call earlier, about looking at options under unit credit in the short term, and then just doing everything they possibly can to limit their expenditure. It is one of those areas where they've sort of been not completely bypassed, but there's not a lot of guidance or support out there directly for them, unfortunately. But at the moment, that's the key things to consider. If you can furlough yourself, and then look at options around cutting your costs as much as possible, and get on and explore universal credit, because like I mentioned, if you're successful and eligible, there are grants, payments due within a couple of days from a successful application. So yeah, unfortunately, I can't bring much more to that at the moment. Obviously, of course, there's the loan initiatives as well for that.
Things may change. I think that's also, I mean, there's a lot of pressure on the government to change those rules or those, the finance offering. And I'm sure, Odhran, you'll probably know more about that than me, but I do know there is pressure on the banks. Another question. So if I'm a director and wish to furlough myself, but I'm doing a statutory duties, books, paying staff, etc., but I send an invoice, sorry, that's what they're doing at the moment. If I send an invoice for work we did prior to the 23rd of March, or any sort of credit control, is that breach? And also, they have temporary workers currently working for clients, and the system generates automatic invoices. Is that okay? So they're not actually active, but the business is automated and active.
I think automated invoices, I can't see that being a problem, to be honest. But I think coming back to your the earlier question, I think you've got to look at what the purpose of all of these initiatives are for. They're to keep business going, so they're to keep them going strong and to try and get through this. So to penalise businesses that are raising an invoice that would lead them to generate cash for work that was carried out before this even happened, I just can't in any possible way see how that would form a breach. So I think they'll be okay with that.
Thank you, Joe. I'm going to look at the comments on the side because there's some questions in there. It's one for Mark. On the back of the equity dilution question, we see tons of great opportunity to buy businesses and events a few competitors in our industry, which can help us throttle and grow product portfolio. The business case is strong, but we don't want to pay cash. What options are available?
Can offer shares in the business? Would they? I'm asking you the question, which you don't know. I'm sure they could offer shares in their business. They could do some sort of deferred consideration. Does that? I can't see the questions on my screen. Can you say again? Sorry.
Do you know what? I think it's one of those questions. We know the person who's asked the question. I think let's. A question is, how is the best way to raise money to buy the business?
Oh, okay. Well, I think that's probably one for Odhran, seeing as would I be right, Odhran, to say you're interested in lending money for companies to buy the businesses?
Absolutely. We're comfortable funding acquisition finance. If there are assets within the target, that we can, lend against, we're very comfortable with that. The combined business, we're very comfortable, looking at the assets of the combined business. We can always do a stretch in order to, if it makes financial sense for everybody, we're very comfortable to you know, to do to do a bit of a stretch, but effectively you're getting cash flow at senior debt pricing. You know, we're pretty comfortable, you know, with that.
Can I jump in, Mitch, as well? Sorry.
Yeah.
So would you, I'm not sure whether you do it, but you do a mixture of trade, asset finance, invoice finance. Could you do all the different components of that?
Yeah, of course, absolutely.
So rather than it just being raising money for the business, to actually do all
like
the component parts.
We're not cash flow lenders, so we're not, you know, focused on the EBITDA of the business. As I said, though, you know, it's important to remember that we're not going to be lending willy-nilly, you know, to business that we don't think are going to be viable. You know, but if there are assets in the business, if there are fixed assets or current assets within the business that are, you know, underutilized or unutilized, then we are very comfortable lending against those, and it's a basket of assets that we take our security against. You know, so we're whether it be property, you know, fixed assets, whether it be plant and machinery, you know, whether it be current in, you know, like assets and like debtors and stock, we're very comfortable, you know, lending with those. And unlike an awful lot of other ABLs, we don't need to be invoice discounting led. You know, we're able to, you know, do stock only deals or property only deals. You don't have to take all of our products in order to qualify for one of them. You know, we're very comfortable with, you know, with just, you know, using maybe one of them or two of them rather than, you know, the whole suite.
And are private lenders like Nucleus regulated? And what happens in the event that a company with a loan from Nucleus wants repayment breaks like mainstream banks are offering?
Well, the very good thing with us is that if you have, you know, if you have a product, say you have an ABL product, you know, from us, that flexes up and down. So if your business has gone into hibernation, then you're not going to be paying anything because you're not going to be utilizing our capital. You know, if, say, for example, we haven't, thank God, had one of our companies, you know, one of our borrowers come to us and ask for a holiday yet. I don't think I'm you know, I'll be open to correction from my, you know, from the people in our portfolio management team. But, you know, so far everybody has, you know, has been, you know, in good health. You know, thank God. Yeah, I mean, from a commercial point of view, and also, you know, from a physical point of view too, we haven't had, but I'm sure our portfolio management team, you know, would be able to, you know, for a realistic, you know, request, you know, I can't imagine that we're going to ruin the road for a halfpen's worth of tar, you know, on that basis. You know, we're not going to destroy a good company or a good relationship on the basis of, well, you know, it's a couple of months or 3 or 4 months. You know, everybody's a grown up.
Thank you, Odhran. I'll do a couple more questions, and then we'll. Anyone who's got any more questions who wants to ask anything, again, feel free. Drop me an email, mitch@nordens.co.uk, and we'll get it answered for you. If you have any clients that are not paying money owed, is there any advice you can give? I think our Joe, Mark, does any of you want to answer that?
In what context, Mitch? You know,
So if clients aren't paying you money, so more credit control. So with regards to your, you know, in strategic, when you're working closely with a client, what advice would you give?
Well, I think obviously, like we said, have that initial conversation with the client. Try and set a kind of plan together with them about when they're going to pay, if they're going to pay, why they're not going to pay. Firstly, is the invoice in dispute? If it's not in dispute, then they're basically saying that the work is genuine. There's no issue there. So I think establish all of that first. And obviously, if they're still in a position where they're just dragging their heels and not paying, contact us separately, and we can put you in touch with people that can help take it further forward. Because I think in this climate, let's do what we can to people, and then if they're not playing ball, so to speak, then we'll look to take it further and explore other options. So pass me over their contact details. I'll be happy to have a chat with them offline.
If I may say as well, possibly, and we're very comfortable to fund invoices, and we can fund invoices up to, you know, 95%. So if say, for example, somebody isn't paying, then, you know, you already have that invoice, you know, funded, and if there's credit insurance, then, you know, everybody's covered. You know, you're taking a risk on funding your client effectively for the 30 or 60 or 45 or 90 days, whatever you have, and that effectively clogs up your cash. You know, that's where the bottleneck happens, and that's why. So the client is holding on to the money that would pay the invoice, and you're left, you know, with that hole. You know, with using invoice discounting, there is no hole.
Can I add a different direction? I think if you've got a long-term relationship with the client, we're in difficult circumstances. Everyone wants to work together for the long term. I think it's about working together. If someone needs help and it fits into your terms of business, even if they're late paying, I still think you should consider working for them. It keeps everyone busy in the office or in your business, which may or may not be important. If those people haven't got anything else to do, it may be a good thing. But I think it's just important. We've all seen examples of. I read one yesterday. So it was an accountant who pushed a client who owed him money and refused to do extra work, and they fell out because of it. The guy went somewhere else, and then his business was worth, I don't know how many trillion, billion pounds or whatever. And they remained friends afterwards, but he felt that he pushed him. And I think it shouldn't just be a commercial, they owe us X and they're not paying, we shouldn't do work. We've all got long-term relationships with people. And it shouldn't be so short-term that we just look at now and say, you're not paying, we're not doing work. We've all got problems. We're all asking people for help. So a different spin on it.
It's a more holistic approach. I agree with that. You can only work with them. But as I said, you can insure yourself against that eventuality by discounting your invoices.
Yeah.
Perfect. All right, I'm gonna end it there. Anyone whose questions that we haven't answered, I apologise. Like I said, email them mitch@nordens.co.uk and we will get them answered for you. Anyone who wants an introduction to anybody, again, feel free to drop me an email. Joe, you want to say something?
Yeah, I just wanted to mention that someone's made me aware that when I was talking about the CBILS loan and the interest rates post the 12-month interest-free period, I think I said 3 to 5% per month. It's actually 3 to 10% per year. So I just wanted to clarify that for anyone that I've kind of misadvised there. That's all.
Thanks, Joe. Great. Thank you, everyone. Thanks to everyone who's joined. Thank you, Joe, Odhran, and Mark for coming on.
Thank you.
Pleasure. Absolutely.
Bye-bye.
Feel free to get in touch with us at Nucleus via Mitch or Mark or Joe. Very comfortable.
See you guys.
See you.